Hold on to your portfolios because China just made a move that could either save or destroy the global economy. A $1 trillion chess move that has Wall Street scratching their heads and asking, is this the ultimate trade war game changer or the biggest trap in financial history? What's up, everyone? Welcome back to the channel. I'm your host, Ali, and today we're diving into the most shocking development in US-China trade war. Frankly, nobody saw this coming. I never thought this was going to be a thing. China just offered to invest $1 trillion in the American economy, and I think there's a massive catch that could change everything you think you know about global investing. Hopefully, by the end of this video, you'll understand why this deal might never happen, how it's already affecting your portfolio, and most importantly, the 3 investment strategies you need to protect yourself no matter which way this plays out. Smash the like button, hit subscribe, and let's decode this $1 trillion mystery together. All right, let's get right into it. We're going to break it down in 4 key points, starting with number 1, the $1 trillion mirage. This is China's unprecedented $1 trillion investment offer to the United States. According to Bloomberg and multiple financial sources, Beijing is essentially dangling this massive carrot in front of the Trump administration and asking them to drop national security restrictions on Chinese deals. But here's where it gets interesting and suspicious. If US allies like Japan and South Korea aren't willing to give cash commitments, then why would China, America's biggest economic rival? And why would they suddenly want to bankroll their competition? The data tells a devastating story. Chinese investment in the US has absolutely collapsed since the first trade war in 2018, in Trump 1.0. We're talking about a drop from nearly $60 billion per year down to just $2.1 billion in 2025. That's like a 96% crash. Think about this logically. After what happened to Russian assets, after TikTok's forced restructuring, after the CFIUS blocked deal after deal, would you risk $1 trillion in a country that could potentially confiscate your assets? The Committee on Foreign Investment in the United States has already stopped Chinese firms from buying MoneyGram, forced the sale of Grindr, and essentially took control of TikTok's US operations. And here is the final kicker. Even if this deal goes through, Trump's team has made it crystal clear that they get to decide where the money goes. As Treasury Secretary Bessent stated, these investments will be largely at the president's discretion. So China could be and would be writing a blank check with no control over how it is spent. Key point number 2, the real winners and losers. While everyone's focused on this $1 trillion headline, the real action is happening behind the scenes, and it's reshaping global supply chains as we speak. Let's talk about what's actually working. The Brazil-China partnership just announced a $1 billion investment fund targeting mining, agriculture, infrastructure, and AI. This isn't hypothetical money. It's real capital, with Brazil's development bank contributing $400 million and Chinese Export-Import Bank adding $600 million. And here's where it gets fascinating for investors. When Trump slapped 50% tariffs on Brazilian coffee, China immediately authorized 183 Brazilian coffee companies to export to their market. Before 2020, China bought virtually 0 coffee from Brazil. And now, by 2023, they're importing like 1.3 million bags of coffee. I've said this before. This is economic warfare at its finest. Every time the US closes a door, China opens 2 windows. Brazilian farmers who lost their American customers now have access to 1.4 billion Chinese consumers. And with companies like Luckin Coffee, they've aggressively expanded and challenged Starbucks in Asia. And that trend is just getting started. Now, on the other hand, we have the semiconductor space. And that's even more telling. Just last year, China committed $142 billion to their chip industry. That's more than the US, EU, and Taiwan combined. They're not asking permission. They're building alternatives. For investors, this creates clear opportunities. Companies that can pivot from US markets to Chinese consumers are positioned to win. Commodity exporters with diversified customer bases are outperforming their competitors. And tech companies that can operate in both ecosystems without triggering national security concerns are basically the premium plays you want to watch out for. All right, key point number 3, the energy and infrastructure reality check. Let's talk about something the mainstream media is completely missing. The infrastructure reality that makes China's $1 trillion offer even more questionable. Data centers are the battleground of the AI revolution, and the numbers are actually staggering. The US currently controls around 44% of global data center capacity, and as of March 2025, that number rose to 5,426 data centers. Now, when you look at the numbers in China, is less than 500, coming in at around 449, which represents about 25% of capacity. But here's the critical factor nobody's discussing: power. The AI data centers are projected to consume 4.4% of global electricity demand by 2035. In the US alone, data center demand could reach 8.6% of all electricity consumption. This isn't just about money. It's about actual physical infrastructure and energy security. China has a massive advantage here that most investors don't understand. They have cheaper, lower labor costs and significant lower borrowing costs than the United States. So why would they just give the US $1 trillion to strengthen America's position in the exact industries where China has natural advantages? You got to think about it. If you had the world's largest manufacturing base, the cheapest renewable energy infrastructure, and access to rare earth minerals, would you fund your competitors' expansion, or would you double down on your own strengths? The smart money is already figuring this out. While politicians debate trillion-dollar headlines, BRICS nations are quietly building alternative financial systems. The Brazil-China Fund is just the beginning. You should expect similar partnerships with India, South Africa, and other BRICS members. We know that China will buy everything that Russia has to offer in terms of energy, and they are the largest importer from Russia. And since the EU blocked sales of Russian oil and gas to other EU countries, China has just been eating up that supply, and they're getting it at a very good price. For investors, this means looking beyond the headlines. Infrastructure plays in emerging markets, renewable projects in BRICS nations, and companies that can navigate this multipolar world are where the real opportunities lie. Key point number 4, investment strategy and the market implications. So you might be asking yourself, Ali, what does this mean for my portfolio? Or there are 3 key strategies emerging from this analysis. First, diversification is more critical than ever. We've talked about this a lot in my previous videos. The days of betting everything on US-China cooperation are over. Look for companies with revenue streams across multiple regions, especially those tapping into the BRICS growth. Secondly, pay attention to commodity flows. When trade routes shift, commodity companies often benefit. Brazilian agriculture exporters African mining companies and Middle Eastern energy firms are positioning themselves as alternatives to traditional US-China trade. Third, infrastructure and energy are the real battlegrounds. Companies building more data centers, renewable energy capacity, and power infrastructure in emerging markets could see explosive growth as these nations develop their own technological capabilities. The trillion-dollar headline might never materialize, but the underlying trends are reshaping the global market right now. Smart investors are already positioning themselves for a multipolar world where economic power is in more distribution than ever before. If this analysis opened your eyes to the real forces behind shaping the global markets, smash the like button and subscribe for more deep dive geopolitical investment content. We're tracking these trends daily and weekly and breaking them down exactly how they impact your portfolio. What do you think? Will China really invest $1 trillion in the US? Or is this the ultimate economic bluff? Make sure to drop your thoughts in the comments below. Until next time, stay informed, stay diversified, and I'll catch you in the next video.